All righty, folks, we're going to talk stock market rotation, retail sales. We're going to talk about what's up with Mr. Beast. But before we do that, I have a very, very special guest for you, somebody that's going to be at our event. Yes, folks, this is the one and only Dorothy Zuber,
Hi, family.
also known as my mom. She's come out to Vegas. She's going to be at our ORaaT event. So if you want to know who helped create me, oh, see, I always do that backwards. That one over there. All right, Mom.
Okay.
Thank you.
Mwah.
All right, see you soon. All right, hopefully that will be fun. Hopefully we'll see you there, take some pictures, ask my mom embarrassing questions. I'm sure she will. And she has pictures. She has embarrassing kid pictures. So I am not looking forward to being made fun of, but hey, we'll see what happens. She gave me a dirty look. Anyways, folks, let's talk about retail sales. Again, what is going on with the consumer? Retail sales, frankly, disappointed. Retail sales were expected to be up 0.4% after being up 0.6% the month before, and they were flat. So again, the flat, better. Is the consumer breaking? Is this a sign that the K-shaped economy is struggling? Are we seeing negative wealth effect? All very, very valid questions. And again, we will wait for the follow through next month to see if that is confirmation. We also got the small business economic trends or forecasts, what's going on with SMB, small businesses, and their optimism is still holding above the 52-year average, highlighting that job openings are down and hiring plans are down. So again, I do think we're getting more and more signs that the labor market is breaking. But again, we will wait to see. I believe we get the jobs number tomorrow. Do we get a double-digit number? Do we get a surprise negative? Stay tuned for tomorrow. It's going to be very, very interesting. Again, expectation was 93 on the survey, came in at 91, but again, still above the 52-year average. One thing going on in the stock market, it's very interesting to see that the Mag 7 is still really selling off, although the market continues to march higher. We're getting folks, what some folks call a market rotation, where investors are selling 21st century innovators to buy 19th century businesses. I thought that was a very interesting take on the market. Don't know if you guys saw this, but Mr. Beast is continually expanding his portfolio of companies, now buying a teen-focused banking app. Talk about something that could probably really move the needle in the business, could really help the next generation learn about money. Look forward to seeing what Mr. Beast does with this. He bought Step Mobile. I did not see a price for said transaction, but again, Mr. Beast bought Step Mobile, a teen-focused banking app. So good on him. Morgan Stanley highlights that spending is rising across all income levels, especially at dollar stores. Think about what Morgan Stanley just said there. Spending is rising across all income levels, especially at dollar stores. What does that really mean? Well, from an economic perspective, it's called switching costs. In reality, people are trading down. So you used to shop at Nordstrom's, then Macy's. Macy's, then Kmart. Kmart, then Dollar Store. Dollar Store, then Goodwill. So consumers are still spending. They're just trading down. Not particularly good. And it's especially noticeable at higher income levels, according to Morgan Stanley. Looks like private lenders are starting to take it on the chin with busted flips. Don't know if you guys seen this, but there is increased foreclosures in what we would call DSCR loans to the tune of 7.4% for properties financed in Cape Coral, Florida in 2023. I do believe that we're seeing busted flips across the country. I'm starting to hear from more and more investors and folks around this space talking about people that can't sell flips, right? Rising holding costs, bad timing. So again, we are starting to see busted flips or DSCR loans go bad. We did see another software name report yesterday and really highlight that AI is coming. Don't know if you guys saw this, but Monday.com Monday.com, if you don't know who they are a project management software, a SaaS or term-based business. Stock dropped 21%. 21% on some weak guidance. But really what's happening, folks, as I wrote in my SaaS Apocalypse post a couple of days ago on LinkedIn, what's happening is AI is threatening the SaaS business model. When I was a software professional and software leader, we went through a very hard time where we went from what was called perpetual licenses to term licenses. If I was running a software team or a go-to-market team right now, we would be hyper-focused moving from term-based to value-based. This evolution is going to be forced on all SaaS providers. It will not be fun. It will not be fun. But if you want to save your business, you're going to have to figure out another way. And the best solution I have for you, if I had the magic wand and ran sales teams again, would be we would have to figure out value-based pricing, because the term-based model is going to be disrupted exponentially by AI. All right, let's talk and close out talking about the Fed. Fed President Bostic said, starting to see questions about confidence in the dollar. Ooh, that should send shivers down your spine. We can't, if people lose confidence in the dollar, this whole fiat system goes kablooey. Choppy jobs data is another reason for Fed caution. Again, this is something I told you about over the weekend I'm looking for. Are the Fed presidents starting to talk about labor market? Again, I'm on record saying they're late. I'm on record saying inflation is nowhere near the reported number of 2.6, as shelter inflation is negative, not positive. You guys know the drill. I've hit it a lot. Fed President Waller, some crypto euphoria that came in with President Trump is fading. Clarity on crypto has stalled in Congress. So again, folks, perhaps something that explains the Bitcoin, Ethereum, and other sell-off is just the euphoria is over. I would argue it's replaced. I think you could see, there are still a lot of crypto bros that jumped in on silver and gold. So I just think the euphoria moved to a different asset. Fed President Moran, tariffs are not a big driver of inflation. Tariffs are will allow for lower rates eventually. Basically, what Fed President Moran is telling us is he expects the income or revenue generated from tariffs to help pay down our debt, which will then bend the curve, which will allow for lower rates. That's what Fed President Moran believes. We are seeing some signs of stress in the job market. Again, this is, I think, a very accurate statement. I do believe that is happening. Wall Street Journal put a post out about Mark Zuckerberg. Mark Zuckerberg's given the middle finger to California. Yes, this stupid, idiotic California wealth tax of 5% is driving billionaires away en masse. Mark Zuckerberg just bought a Miami waterfront mansion. My next guess is he will no longer be a California resident. He will move to the state of Florida. And that will mean California loses another 13% in taxes. But more importantly, typically where the CEO goes, that's where the jobs go. So will Facebook have more and more employees in Florida at the end of the year? I think the answer is probably true. And then lastly, folks, give a shout out to the one and only Mike Simonson. He puts out a great weekly post about the real estate market. Shout out, Mike. My notes from his latest report, we have 688,000 active listings. That is actually up 8% from last year. Remember, folks, 8% from last year is still trending lower. Why? Because we were up 32% year on year just a few months ago. Pending sales also up 3.5% year on year. Again, lower rates will do that. We are starting to see relisted. This was a big question I had at the end of the year. How many properties would be relisted? We got 75,000 relisted homes from last fall already. My guess is this only goes higher. It wouldn't shock me if we got over 100,000, quite frankly. Median home price still up, but up 1%, 388,475. folks, real estate's going to be flat for years to come. It's already been flat. It'll be flat. We got all the appreciation in the first couple of years. It is what it is. So, it's nothing big up, nothing big down. Price reductions, 32.4%, but in context, that really means nothing. That's actually going down, right? We peaked at over 34%. We're now under 33. It looks like price reductions are falling as the spring market enters. And the big question that Mike asked, and I thought it was a good one, will active inventory, which again was reported up 8%, actually go negative by the summer? And you know what? I'll take that bet. I do think active inventory will be negative, meaning not growing or reversing once we get to June or July. So very interesting stuff. Folks, let's congratulate a couple of people for joining school. Shout out Lo and Michael. Make sure, guys, you introduce yourself. Take advantage of the great community, the active forums, the accountability groups, the free educations. Obviously, you still have time to sign up for school if you want to live stream our Vegas event. There are 4 Zoom links in the calendar, morning and afternoon of day 1, day 2. Again, it is something I'm giving away only to school. It will only be live streamed in school. It will only be replayed in school. So again, nobody else except our wonderful and intimate school community will be able to watch the event. So again, sign up, set your clocks, and spend the month in our community and see if you like it. Folks, I hope you have an amazing day. We'll be back 7:30 tomorrow. And hope you have a great day. Don't forget, check out Steadily, the sponsor of the Daily Financial News. They've saved Olivia and I over $20,000, bailed me out of a horrible situation last week by getting 9 properties insured inside of 24 hours. And I couldn't be happier with their level of service or, frankly, their value. Give them a shot. Maybe they can help. Maybe they can't, but you won't know until you give them a shot. Thanks, folks. Take care of yourself. Later.